Hello everyone, welcome to Minds of Aspirants YouTube channel. We are seeing a series of videos about the concept clarity sessions, and in this video we will be concentrating on the topic of public finance. See, this is the most important topic in economics for UPSC prelims, and each and every year they will be asking a question or two from this chapter. Okay, let's go get into this chapter. Public finance. In general, the public finance is the study of what role a government plays in this economy. So that is what public finance in a very simple terms. Actually, it assesses the revenue and expenditure statements. Okay, it will be assessing the government's revenue and expenditure. Can you able to get the concept? It is the branch of economics that assesses the government's revenue and expenditure. Fine. Generally, budget as a term has no mention in the Constitution of India. In Constitution, in Article 200, in Article 112, it's mentioned as annual financial statement. Okay. This annual financial statement represents the estimated amount of receipts, that is the income, and the expenditure of the given financial year. As simple as that. Okay. Who prepares this budget? It is the Department of Economic Affairs in the Finance Ministry develops this budget. Fine. So there are 3 points in this slide. Article 112, and it is the estimated of receipts and expenditure, and Department of Economic Affairs in the Finance Ministry. Then the budget contains actually the receipts and revenue receipts and capital receipts. If the estimate is the amount of revenue and this capital combined together. It is the ways and means. What are the ways and means necessary, and what are the ways and means options available for the government in this budget? That is the concept behind this budget. Right. Actually, in an annual financial statement, there are 3 segments. That is, it will contain the policy of the present year. Fine. It will also contain the lapses or the reason for a deficit or a surplus budget that occurred in the previous year. Okay, and it will also contains the financial policy or the new schemes or taxation proposal for the future year. So past, present, and future. These 3 elements will also present in the annual financial statement. Good. Okay. Moving forward. These are the 3 articles which represents the annual financial statement, and the budget revolves around in these funds, that is Consolidated Fund of India, Public Accounts of India, and Contingency Fund of India. Please do remember these articles, it will come handy in this examination. Okay, so being said that, and let's see how the budget is classified, and this is the major part of this session, where we are going to deal a chapter, a flow of concept where you should able to classify these account in a conceptual, in a clarity way. Okay, you will be able to identify each and every account in a specific manner, where you will be able to classify this in a very clear fashion. Right? See, why we are studying is this in MCQs, in UPSC MCQs, in recent years, or being said for a decade, they will be asking a question or two regarding, for example, say salaries. Okay. Salaries for government employees is paid under which head? They will be giving an option A, B, C, and D. You have to identify the account. Fine. So for that, we have to analyze how these accounts are classified. Okay. In a simple manner, let's see, for example, salaries. Okay. Salaries to the government employee. Fine. So how you are able to identify this account means we are going to see 2 rules. Fine. Rule number 1. Let's see if this salary applies to the rule 1. Is it able to increase this asset for the government, or is it decrease the asset of the government, or whether the salaries to the government employee will increase the asset of the government or decrease the asset of the government. If this doesn't affect any of these 4 criteria, okay, it will fall under revenue account. Fine. So you have to apply the rule 1 to the given sample here, and you have to check whether is it any gain in the assets or decrease in the asset, or is it any gain in the liability or decrease in the liability. So here salary is neither it creates an assets nor it's create a liability, so it will come under the revenue account. Okay, This is the rule number 1. What about rule number 2? Rule number 2 is we have to identify the money flow. That is it coming to the government? Is it coming to the government or going out of the government? Is it an income or expenditure? Obviously, salary to the government employees is expenditure. So, this salaries to the government employee will form in revenue expenditure account. Okay. Now, let's see another example. For example, we are getting a loan. We are getting a loan from abroad, say US. Okay. We are getting a loan from US, and you have to apply rule 1, right? So, in rule 1, this loan from US either increases the asset or decreases the liability. Either one of the possibilities there. Of course, it will have an impact on liability side, where we are supposed to repay the loan to the US. So the liability of the Indian government will increase. So obviously it will form under the category of capital account. Now we have to apply the rule number 2. This amount is either income to the government, or is it going out from the government. Obviously loan is the amount where from USA means from USA will take Indian government will take from the US government. So obviously it is a income to the Indian government. Okay, so it will fall under the category of capital receipts. So this is how you have to classify the account based on these two rules. First rule is asset and liability rule, and second rule is money flow rule. Fine. In this concept, the revenue we will be classifying further, where what are the concepts behind the revenue receipts, or what are the conditions that is falling under this revenue receipts concept, or per se each and every account we will be dealing with separately. In revenue receipts, normally tax revenue will be there. Either it will be tax revenue or non-tax revenue. All the revenues that are generated will be in these two categories will be termed as revenue receipts. In a revenue expenditure, normally in general it will be recurring in nature. For example, salaries, okay, pensions, and any of the grants we can able to pay. These all will be coming under the revenue expenditure. Okay. Then what about capital account? Capital account, in capital receipts, repayable of the borrowings can be a possibility there. It will be increasing or decreasing the liability side. Fine. In capital expenditure, you can able to have a loan given to the others. That is, for example, when government gives loan to a country like Somalia or Niger, it will be coming under capital expenditure pattern. Or for say a government is building an official complex, okay, it will be coming under the asset class. So either in asset or liability, it will affect have an impact on capital account. So these are the two rules that you must keep remember in order to get correct the MCQ. So in revenue receipts, these are the taxes that are comes under the revenue receipts, and these many taxes has been modified due to the introduction of GST. Okay, I'm just listing what are the taxes that has been impacted in revenue receipts, right? So usually this have excise duty, customs duty, corporate tax, income tax, that is service tax, and all these doesn't have any impact on asset or liability statement. So obviously these are the revenue account. And what about the non-tax revenue? It will be have an interest receipts and obviously dividend and profit. Okay, and also some other non-tax receipts includes the currency, coinage, mint, and grants in it. Okay, these are the these comes under the revenue receipts account. What about expenditure account and revenue expenditure? Normally I said it is has been a monthly recurring in nature. Recurring expenditure will be coming under the revenue expenditure. For say interest payments, defense and police, subsidies will be given to union and UTs, okay, states and UTs, okay, and grants will be given to states and UTs will also be falling under the revenue expenditure account. Okay, as we mentioned many times, I have mentioned pensions and salaries will be coming under this one. So these are the classification where the revenue expenditure can be classified. Then we have completed the classification of revenue receipts under revenue expenditure. Now we will be going for capital account side. In capital receipts, okay, the borrowing which we have taken from abroad, we saw an example, right? From US, we are borrowing, and it comes under capital receipts because it has an impact on liability side and it is an income to the government. So it comes under capital receipts. And non-repayable recovery of the loan, that is if for example we have given loan to Somalia. Okay, we are given to Somalia, and so if Somalia is repaying the loan, our liability, our asset share is reducing. So either it has increase or decrease. In either case, it is it comes under the capital account. Okay, since Somali is paying to us, it is an income to us, recovery of loan. So that in that matter, it comes under the category of receipts. Okay, so capital receipts. Obviously, there are other classification where the internal borrowing and external borrowings come to play. Okay, all these are capital receipts. Now moving forward, we are having a balance of capital expenditure. Fine. In capital expenditure, see it either it has to increase or decrease asset, or in the sense either in liability. Okay, for example, investment in building, land, equipment, machinery, investment in shares, loans and advances by the central government to the state government. Okay, all these concept, it has either an impact on asset or liability. Therefore it comes under the category of capital account. Okay, all these are being expenditure, the outgoing money. Okay, outgoing money represents the capital expenditure. In normally I think by 2016 to 17, I think this form of classification has been revoked by the government of India, where previously it was a planned expenditure and non-planned expenditure. By the recommendation of C Rangarajan committee in 2011, it has been abolished. Okay, now a basic difference between the revenue expenditure and capital expenditure: it neither creates assets or reduce the liability. In the revenue side, in capital side, it must either create an asset or reduce the liability. Fine. In revenue side, it will have a regular and recurring in nature, whereas in capital side it won't be regular, whereas it is irregular and it is a non-recurring. For example, you are buying a machine. For first month you are able to buy a machine, and it is not necessary that you are buying the machine every month, right? So this comes under the capital expenditure. Then it is a short term in nature, revenue expenditure, whereas capital expenditure long term in nature. Okay, these are the examples. Going forward, now pause this video for a moment and please do identify yourself that what these are classified under. It is either under the revenue expenditure, or is it comes under the capital expenditure. You have to classify for each and every one of the item present here. Okay, let's discuss the answer. See, salaries paid to the army officer. Salaries, obviously it is an expenditure, and the salaries doesn't have any impact on asset and liability, so obviously it comes under revenue expenditure account. Fine. Obviously, and option second item is loans given to the union territory. Loan, first rule is we have to see the either is it asset or liability impact is there. Yes, it is impact is there, so it comes under capital account. Okay, so the money is incoming or outgoing. Obviously we are giving loan to the union territory, so whereas it will be coming under capital expenditure, that is money is going out. Then item number C3, pension paid to the retired government employees. Obviously it comes under the category of salaries, right? So revenue expenditure will be there. And interest paid on national debt. This interest is neither created any asset or neither created any liability. We are paying the interest to the another party, so obviously it comes under revenue expenditure. Then repayment of loan taken from the World Bank. We have taken the loan from World Bank and now we are repaying it. Okay, our liability is getting reduced, so it comes under capital expenditure because we are paying the loan to government bank. Money flows outside, represents capital account. Okay, now pause this video and do identify these 6 items. Is it either comes under revenue receipts or capital receipts? Okay, fine. Let's discuss this answer. The loan discussed, the loan recovered from public sector enterprises. It is obviously a capital receipts because it reduces the assets of the government, right? Okay. License and court fees received by government in the year 2014-15. Uh, this fees or any penalties that government is generated, it neither increases the asset nor it affects any liability. So obviously it is a revenue to the government, and this is according to the rule number 2, and therefore it comes under the category of revenue receipts. Okay. Now, obviously we have seen this example. There is no need to further discuss this. It is a capital receipt. Then sale of shares in held by the government in public sector. Obviously, it is a capital receipt. How the sale of shares, that is, it reduces the assets of government. I have said that either it increases or decreases the asset, or either it increases the decrease of the liability. Is it affecting either of these two, then it will have it comes under the account of capital category. Okay, so here take for example a recent phenomenon of LIC, where the government sold out the some 3% shares, right? So taken that as an example, obviously it is an income to the government, right? And since it's the government entity, when we are selling the government entity, it will reduce the asset of the government. So therefore this comes under the capital receipts. Okay. Then we have gotten help from Microsoft for the victims of flood. Okay, in which category this comes under? Microsoft is came forward for helping purpose, and obviously it is an income to us. Okay, this does not affect any asset or liability, so it comes under the category of revenue receipts. Right. Then last one, the amount borrowed from Japan for construction of metro projects. Okay, so obviously the Japan is constructing metros, which means it investing in infrastructure development project, which is an which creates a liability for the government. So obviously it comes under capital receipts. Fine. Okay, this is the overall simplification of the concept, where we have classified receipts and expenditure side, and is it creates liability in here in revenue receipt. There is no talk for creating liability in revenue account. Okay, so no. For example, example is income tax. And in capital, is it any having an impact on liability? Yes, obviously yes. The moment we have saw the name of capital, it sure and short it will be having a impact on liability side. So yes, and example is borrowing. Okay. Then does the revenue account has any impact on the asset side? Obviously no. Example, sales tax or any other tax per se. And when the capital receipts has any impact on the asset reduced, is obviously, as just now we saw an example of LIC where the disinvestment takes place. Okay, now coming on to the expenditure side, does this reduces any liability on the revenue side? Obviously no. Example, we have just saw this payment of salary. In capital side, does this have any impact on liability side? Obviously yes. When there is a repayment of loans, government liabilities are reduced, right? Because we have paid a partial amount of loan, thereby we can able to pay lesser in the next time. So obviously the liability of the government for the repayment of loan is reduced here, so it comes under capital expenditure. Okay. And finally, is it creating asset under the revenue expenditure? Obviously no. Since it is a recurring in nature and it is a short term, it won't create any asset in revenue expenditure. Okay, no, it won't create any asset. Example, payment of pension. Right. And last one, capital expenditure will have create any asset? Obviously yes. Purchasing of machinery or purchasing of land or building construction will all comes under this category. Right. And I hope you have a better clarity in understanding this concept, and please let me know if you need any other further concept clarity sessions, and please do specify that chapter or any other topic. I will be focusing on that, and if you have any doubts in this video, please let me know in the comment section. Okay, thank you for watching this video. Have a good day.